Okay, it's 11 o'clock, so we'll go ahead and get started with some announcements. Good morning. Welcome to Maynard Costerisan's nonprofit education series. This month, we are going to be talking about streamlining processes and maintaining internal controls. Can you do both? We're so happy to have you here today. A few housekeeping items. This session is being recorded. Everyone is muted, but if you do have questions throughout the webinar, please type them in the chat. And I will be monitoring that. We will have some time at the end of the session to answer your questions. I would like to welcome Sarah Jennings to today's session. Sarah is a director here at Maynard and heads up our consulting division. She leads our firm's fraud and forensic practice and is on our nonprofit team. Sarah has a particular specialization in performing risk assessments and internal control process improvements for organizations. And so this will be an amazing presentation by an expert. Sarah, I will turn it over to you.
Thank you so much, Brandy. An amazing presentation. You put the pressure on right off out of the gate. So I will first thank everybody for joining us today. Brandy's done a great job at putting these sessions together. Again, my name is Sarah Jennings, as Brandy just said. I've been with Maynard about 20 years, and over the last 20 years, I've been in the audit department, accounting work, done outsourced controllership sorts of things, done some software implementation. So kind of it's my path that I've done over the last 20 years to look at efficiencies and controls. I am also a certified fraud examiner, but most of my work is on the prevention side. So that's why we're here today. Again, thank you all for joining us. So today we're talking about really how can you implement internal controls and have a great internal control structure, as well as streamline your processes and procedures. So really, when we take a look at this, we're talking about efficiencies and effectiveness. And oftentimes I feel like those two words collide, or when people are getting their management letter from the audit team or something like that, they feel like, oh, I don't have any more time in the day to implement these additional things, or that seems like it's reducing my efficiency, reducing my ability to streamline processes as I increase the internal controls. We're here today to talk about how you can actually blend the two together. On the right-hand side of the screen is something I'm sure if you've ever been to an internal control presentation, you've seen. It's the fraud triangle. This is offered up by the Association of Certified Fraud Examiners. And really what this tells us is if there's a fraud or if fraud in place, usually you can see these three things intersecting: rationalization, opportunity, and pressure. Usually when we're looking at internal controls, we focus on the opportunity side. So we want to make sure in your organization, the opportunities aren't there for people to commit fraud or abuse or misuse of organizational assets. But also, I think there's an opportunity as leaders to at least understand rationalizations and pressures. Oftentimes in nonprofit organizations in particular, we're competing with for-profit organizations for talent, right? So you may not have the resources to be able to compete from a straight compensation perspective. So we have to make sure that we're thinking about the team. They have external pressures. What can you do or as an organization to alleviate some of the external pressures that might be there, or provide an outlet for them? Some things to consider: employee assistance programs that allows, if there are those pressures, it just provides some additional support for your team members to have at their fingertips. Another benefit that the organization is giving. Rationalization is the other area that, again, we usually don't focus on when we're talking about internal controls. But in a nonprofit organization, if you're finding that your compensation levels aren't up to what your team members maybe think, you maybe can't provide the bonuses that they would get in another organization, a for-profit organization. Oftentimes we hear that. Clearly, that's not always the case, but oftentimes we hear that the compensation, the competitive nature of the talent force right now is difficult for nonprofits to compete in sometimes. So if you look at the total benefits package, instead of just focusing on that compensation, it allows the opportunity for employees to think big picture, the things that they're getting, and not rationalize away why they can borrow funds from the organization or steal funds because they're not getting that bonus. Maybe you focus on the total rewards that you offer, time off, flexibility, other benefit packages that you might have. So just again, big picture things. When we start the conversation about internal controls and how to streamline your processes, we really are starting a brainstorming session. So this is important in that discussion. So first, we're going to talk about how to ensure you get all of your money. Really, there's two different ways, right? The money comes in and the money goes out. So how do we make sure that you have controls in place to ensure that all of the money that you intend to come to the organization actually gets there? Many organizations have dues or membership fees. What are you doing to make sure that the listing of members or donors or the subscription structure, how are you making sure that that money actually gets into your bank account and is recorded? What we recommend is there's always a reconciliation. Again, that sounds like another step in the process to make sure at the end of every day, week, or month that everything that's recorded in this extra database is also in your accounting software. In order to do that, though, in a streamlined mechanism, take a step back and think, can these two systems talk to each other? Oftentimes we see organizations that have great controls, but there's a lot of duplication in data entry, in trying to make sure things reconcile because they haven't taken a step back to see if there are ways that they can make the two systems talk to each other, even if it's exporting the data from one system and importing it into another. Whether you're in QuickBooks, Intact, all of those accounting softwares have the ability to upload those transactions. And the same thing would be true for registration. So we definitely recommend for organizations after every single event, the people that are in charge of the event, they always know what the revenue is. Is that the same as what you're seeing on your financial statements? Make sure that you have reports in place and you have the capability to easily look back and reflect and reconcile to make sure that if you pull up the month of February, for example, and you know that you had your annual meeting in February, your revenue should meet expectations that your event team had. Those are things that you should do across the board every single month to make sure. Again, if you've got streamlined procedures in place to make sure that they're talking to each other, it reduces the step of manual reconciliation, and you can increase your efficiencies, all while increasing your internal controls. So that, again, is making sure that you're streamlining, you're not doing duplicative data entry, but you're also improving your internal controls because you've got other people making sure that that data is correct. Sponsorships are another thing oftentimes that we see are done outside of the system. Maybe you've got some sales folks or business development folks that are doing those sponsorships. All of those things should be recorded in your management system, your CRM, your database of events. That way, there can be that reconciliation back and forth. We recommend that, again, if it's an annual subscription or if it's something that you are doing event-based, all of that's done at the same time that you're doing that event reconciliation. I'll say again, and you're going to hear me say over and over, actually, technology is a tool, technology is our friend. The more and more that we can integrate those two different softwares, the better we are. The more that we are all looking at the same data instead of having Excel spreadsheets for your sales team or your business development team, and then accounting has the accounting ledger, we want to make sure that we're all looking at the same thing all the time. Donations are another area that oftentimes are difficult to make sure that we're protecting, right? Because you never know how much you're going to get in the door. And oftentimes nonprofits have volunteers that are out in the community trying to raise funds or, sell raffle tickets, things like that. I'll say again, and now I feel a bit like a broken record, but we have to make sure that we're reconciling those things. The other thing with donations that we recommend is make sure that you're having expectations or budgets. So if you're starting a new campaign, all of the outreach should be recorded and logged in your contact system, whatever that is, whether it's an association management system or it is a database or something like that. All of the different contact points and asks should be recorded in there. So you have that expectation to compare to what cash actually is hitting the bank. Those are all things that we have to do on a regular basis to make sure that all of the cash that we thought we were going to get actually hits the bank. Again, most often we see comments in management letters, something like, you should have an initial cash receipts listing. You should make sure that somebody is reviewing your bank reconciliation. Those sorts of things. Oftentimes we hear from organizations, we don't have enough people. We only have a small staff. How do we do that and still get everything else done in the day that we have? Those are things that we want to make sure that we use technology. So when we're talking about the cash receipts, for example, there are a lot of different management systems that will allow you to collect more of your receipts in ACH or credit card transactions instead of getting cash or checks in the door. We encourage organizations to make sure that they are talking to their members, talking to their stakeholders, that you prefer to have it sent electronically. There are clearly credit card fees associated with those, and those sometimes are hard to swallow for organizations, but in the big picture scheme of things, it's actually costing you less, even after paying those credit card fees, because then you have that automatic streamlining integration of the merchant services software to your database software, to your accounting software. Those are things that you can do to help reduce the time it takes. On the bank reconciliation side, clearly use the system. There shouldn't be any bank reconciliations that are done in Excel at this point. Those always should be done within your accounting software for a couple different reasons. One, there's a control, because then you can have greater confidence that that's going to tie to whatever's on your statement of financial position. You know that all of those balances are tying out. The other thing is you have that audit trail of who's doing the reconciliation, who's reviewing the reconciliation right within your system. Many systems now, instead of what we saw years ago, there was a printed out bank statement, a printed out bank reconciliation, maybe manual, handwritten, maybe in Excel, and then you'd give it to the executive director or president or someone to review those things, and they'd manually, hand sign off or initial that report. Now there's workflow opportunities within your accounting software, many accounting softwares that can automate that. So you don't have paper that is being pushed from office to office. You don't have that. You have that the bank statement is attached to the transaction or attached to the reconciliation. So it's at the reviewer's fingertips. You can also put workflows in, whether you use something like Office 365. QuickBooks doesn't have all of the same workflow functionality as some other systems like Intact or Business Central, things like that. If you use something like QuickBooks, you can still automate this process. It just may be outside the system in something like a SharePoint auto flow. Those are great opportunities. And from an auditor's perspective, coming into your nonprofit after the fact, they'll be able to see the time and date stamps. They'll be able to see really the transaction and the bank reconciliation moving through your organization. So what used to be said as we need to see that sign off, it's just an electronic signature stamp, if you will. All right, the next section that we've got is now we have the money in the door. How do we make sure that it's going out to the appropriate places? How do we make sure that our disbursements are secure, expense reimbursements are streamlined, and we're not adding fuel to the fire, adding steps when we have all of these different reviews and approvals? Clearly, in any organization, the number one, or when we're talking about disbursements, the number one thing that we recommend is make sure the right person's reviewing and approving every disbursement, every expenditure before it goes out. That can get cumbersome when you have department heads or program directors that are responsible for reviewing something. Does the invoice, paper invoice, go from office to office to office before it can get paid? Often we see that causes delays in payments. And when there's delays in payments, a good finance department, most people are really trying to streamline those things. And sometimes we see corners cut. So it won't go through all of those people because program director isn't timely in reviewing or approving things, something like that. So we want to make sure that we set up the process so we don't have the opportunity to circumvent the systems. That's the goal. There's a lot of different softwares out there, again, that can either go through your current accounting system or attach to it or integrate with it. Concur, Nexonia, Bill.com, so that it's an extended workflow. Intact has this workflow already built in, but now you've got a scanned in invoice that oftentimes doesn't even come in the mail. We encourage people to make sure their vendors are emailing them to one email account. Send that invoice to the accounts payable at nonprofit.org or something like that, whatever the email account might be, that automatically then can be uploaded to your accounts payable system. So now it's attached to a transaction that's coded electronically, not handwritten on it, and that is routed or forwarded to the approver. So that first level approver might be the program director, the department head, or somebody who has a good direct knowledge of what that expense is for and why we're paying for that. The next thing may be, oftentimes we see, so the first is the program director, the next level of approval could be the executive director, because the accounting team has already created it and coded it. Within this system, a lot of those softwares, again, we're talking about how technology is our friend, but a lot of those softwares have the capability to leave comments. So if there's ever a question from the director, the program director, or the executive director, as they're going through that review and approval process, they can put a comment right in the transaction and notify the accounting team to say, hey, I don't know what this is for, or it looks like this should go to a different program or a different account or a different fund. All of that is documented. And again, this is a streamlined process. So even though we're increasing the internal controls, we're helping program directors look at their budgets and holding them accountable to their budgets. They're able to see all of the funds that are being charged to their program. Potentially, the executive director is signing off on sometimes even more transactions than they used to. But a lot of those systems, again, it saves you time in the end anyway, because you don't have that paper that's going from office to office to office. You have that audit trail that anybody can look at to make sure that you see those sign-offs. Within the systems, there's, again, various different systems that you can utilize for this. It has thresholds also that you can say anything over $5,000 has to go potentially to a treasurer, and that treasurer actually can be added as a user on these accounts. It really helps to streamline things and increase internal controls. And I said, as I said in the beginning, oftentimes it seems like those kind of are contrary to each other, improving internal controls or increasing internal controls and streamlining things or reducing some of the steps in the process, but this allows for both. The other area that we see a lot of risk in organizations are expense reimbursements and credit card charges. Some of that is because of the volume of transactions. Some of it's because it is so cumbersome, specifically for credit card transactions, but it's so cumbersome to match a charge with a receipt. Oftentimes we see in clearly any audit recommendation, any internal control recommendation would be an IRS recommendation for an expense reimbursement credit card charge. We want to make sure that there is a receipt attached to every single transaction with the appropriate business purpose, so we can make sure that there truly are not expenses for your nonprofit organization. From an accounting perspective, clearly you want all of that information and to know what program it may go to. We see some organizations that are now increasing the number of credit cards that they have available to team members for a couple of different reasons. One, it allows for less employee expense reimbursement. That process sometimes can be cumbersome. So different levels are actually just giving maybe all of their directors, all of their program directors separate credit cards. We never recommend just to have a credit card that you share within your whole team. That's more and more difficult to hold people accountable and really check who's charging which transactions. And again, it adds time and tasks to the entire process when you're doing something like that. The other opportunity that you have, there's a lot of merchants out there that are giving options right within the credit card company software to attach the receipts and code the transactions. If it isn't offered by your institution, whoever you have that credit card through, then there are, again, technology is our friend. There are different applications that you can set to integrate with your credit card, your merchant service. So all of the transactions come up into an app, if you will, on a phone or a PC, whatever it might be. And then each employee user of the credit card is required to attach receipts. It's a bit cumbersome to get used to if people haven't been held accountable for that, but give it 2 to 3 months and we see people just get into a routine. The transactions are already there. They're not trying to go to an Excel spreadsheet. They're not trying to print a PDF off or or staple all of the receipts together. They're taking pictures of the receipts and attaching them. From a control perspective, that's incredibly helpful, whether you're improving internal controls because of an audit, because of, whatever the reason you have for starting to look at these things again, that's necessary. You have to make sure that you've got that supporting documentation, but it also allows a much easier process for whoever that first level of review is. So similar as we talked about the disbursement side for credit card charges or employee expense reimbursements, the person directly above the requester or the card user is the one that should be doing that first level of review and approval, because they have direct knowledge of what should be going on. If you have the person reviewing so far removed that they don't know when they're what the schedule is, what should be charged on a credit card, how many lunches, for example, for expense reimbursements or miles are being driven, then it's not an effective control that's in place. And oftentimes this is an area where we can get the right person to review and approve things through a streamlined method that's integrated with your accounting system to, again, increase all of those controls across the board, but also reduce the time it's taking the accounting and finance staff to do those reconciliations. Expense reimbursements are similar to what we just talked about for the corporate cards. There's also applications to make sure that people are submitting things. They don't have to print out a piece of paper, attach the receipts anymore. There's applications, very, very cost-effective, economical methods that you can do to make sure that those are streamlined and people have the ability to submit those expenses. A lot of different payroll companies have that built within their application. If there's an employee portal or an application that they have, it's just about asking that question to the payroll company. Do you have this or that our employees could take advantage of? I worked actually just a couple of weeks ago with an organization, and the payroll company had the opportunity to do that, but they also had an application that did expense reimbursements and corporate credit cards. So they were able to reduce the number of different processes that they have because the application was already created to just put it in one spot. So it really, really streamlined things from an employee perspective, but also from the accounting side, because now you're going one place to integrate all of these transactions instead of looking in multiple different places. The other clearly area in how money is going out that we need to talk about is payroll and related items. So oftentimes when you're talking about internal controls, clearly it needs to be a detailed review if you have hourly workers. Hourly workers, ghost employees are something that we need to pay attention to. Off-cycle pay, certainly something that we need to pay attention to. Years ago, I was on an audit. It was actually one of the first audits that I had done when I started at Manor, and there was the individual that was in charge of the accounting department. She ended up taking money, and she did it by doing off-cycle payroll runs. She followed the policies and procedures that were in place for all of the regular payroll runs, but the executive director didn't realize there were additional pays being done in between those two periods. So reflecting on those internal controls, if you're only looking at what you expect to look at and not asking additional questions about those off-cycle things, looking at year-to-date amounts is incredibly important. If you don't do that, then you're missing a big part of the control process. So how do you streamline that? Because again, that can be very cumbersome also. And I will say that I recommend to clients, look at the year-to-date amounts. Oftentimes that means more to you than an individual pay stub. That you'll catch if there are anomalies or things going on. Look at the bank account periodically just to see if there are payroll fees coming out that you wouldn't anticipate or different transactions. I think that's a good and relatively easy, quick check that organizations can do to make sure that there aren't ghost employees, there aren't transactions occurring that shouldn't be. The next area that we'll talk about are just other assets. So nonprofits often have inventory or raffle items that they get in, or they might have in-kind gifts that they might get in, whether that's investments that they have being transferred over or anything else. How do you protect those other things? And honestly, what we recommend is really just transparency and communication. If you're getting in-kind gifts, we need to make sure that there's a good tracking mechanism. The accounting system is the easiest place to have all of that data. Inventory is the same way, making sure that somebody's looking at those inventory items. If you have, a supply closet, something like that, making sure that the expectation is set that if these are inventory assets of the organization, it's not for personal use. Make sure those policies and procedures are in place. The other thing that I put in this protecting other assets basket is we need to protect our time and our resources. So because that is an asset. All of our team members are assets to the organization. How do you make sure that we are streamlining things and utilizing the technology that we have? So questions that I recommend organizations ask themselves: how many Excel spreadsheets do we have that we rely on, that we work with, or we have to manually update on a regular basis? It really, if you look at the life of an organization, we see oftentimes people have increased the number of Excel spreadsheets because they're responding to questions or requests from their leadership, their board, something like that. And it's really easy to just create a spreadsheet for that. Coming from an accountant, clearly we all love spreadsheets, right? But it's really easy to just continue to create this. And as you do that, you're putting Band-Aid after Band-Aid after Band-Aid on the system. That's not how we want to streamline things moving forward. If we take a step back and protect our assets, protect our resources, our time, we take a step back and we look at the system and say, okay, can the system do this for me? Why am I creating all of these spreadsheets and schedules? Those are some things that we can do proactively to make sure that we're protecting our assets. So I know 30 minutes goes by pretty quickly. We talked about a lot. Are there any questions? I will just open it up right now. Hi, Brandy.
Hi, so yeah, we have one in the chat that we can ask, and actually I have a couple. So first one is, are recurring items like utilities, rent, and those things that happen monthly be required to be approved every month, or would once a year approval be sufficient?
Usually we say once a year. So specifically, if it's going to be the same amount across the board, I don't think that the rent, for example, the lease is going to be approved. So that's going to be the same thing. Utilities, I would say that varies a little bit by organization. If you have, if your organization has multiple different facilities, or if you have different areas that you're covering the utilities for, that I do think you need to make sure that you're reviewing on a regular basis and somebody's approving. The reason for that is we've seen, unfortunately, somebody add their utility bill to the list, or you call the company and add the neighbor's house to the utility billing statement. Those are risks that we want to make sure that they don't just get auto approved every single month. And then you reflect a year later and why are we paying paying on 5 locations, electricity bills or whatever it might be. So utilities, I would say we have some opportunity to do more regularly, but definitely leases and things that are consistent amounts once a year.
Thanks, Sarah.
Mhm.
Also, so you may have said this earlier, but if you're an organization, where do you begin when you want to start looking at something like this?
That's a good question, because I don't know about everybody, but most organizations that we talk to, they don't have time to do any of this, right? Like everybody, yes, of course, this is great, but how do you really start with reviewing the whole process? It's overwhelming and it seems really cumbersome. So honestly, I recommend, there's a couple different options. Clearly, you can call us. We'd be happy to help start the process for you, start with brainstorming, but really it's almost like a mini strategic planning session about process. So we take a whiteboard and just start outlining the life of a transaction and see from a process perspective, whose name it falls under, how many different kinks are in your workflow, right? From an internal control perspective, if that life of the transaction is staying with one person and never moves out, you've got an issue. So I would say treat it as a brainstorming whiteboarding session and just kind of think of all of the frustrations or the difficult areas that you've got, and then brainstorm what possible solutions you might have.
So a follow-up to that, Sarah, if you go through that process with an outside person, say us, or you do it internally, and you go through that and you maybe make some changes or document some things, how frequently should you actually look at those processes and internal controls going forward?
That's another great question. So clearly you're going to look at them before every audit period if you have an audit, right? Because the auditors are going to come and ask about your policies and procedures. Has anything changed? So at minimum, I would say annually. The other reason that's important, not just to look at internal controls, but also the workflow, is because technology changes so quickly. I mean, we go in as auditors, we go in and we ask about the policies and procedures, and not every year, oftentimes there's management comments, recommendations on how to improve internal controls, things like that. The technology is changing so quickly. The answer or the solution that you had 3 years ago to improve internal controls isn't the same as you'd have now. So you want to make sure that you're reviewing what technology is available to you. So honestly, like I said, I wouldn't do it any less than annually.
Great. Well, I want to be conscious of everybody's time now that we've come to 11:31. Thank you, Sarah, for presenting today. Thank you, everybody, for joining us. Tomorrow, we will be emailing out a recording of this presentation, so you'll have that for later if you wanted to go back and listen to a few things and look at some of Sarah's points. Mine and Sarah's contact information will also be in the email, so if you have any additional questions or thoughts, please feel free to reach out. And I hope you all have a great rest of your day and week.